The Monetary Policy Committee of the Central Bank of Nigeria at its July meeting was very cautious in arriving at a policy decision, as members noted the need to continue to support investment, which will ultimately lead to the recovery of output growth. In the end, the balance of their argument on whether to hold or to continue to hike the policy rate leaned in favor of a moderate rate hike to sustain efforts at anchoring inflation expectation, narrow the negative real interest rate gap, and improve investor confidence. Our focus on the program today is an expert analysis of the highlights of the July MPC meeting communique, plus the top stories from the CBN this week and more, all in a moment. Stay with us.
I see. Just hold on. In that case, let me call out my PIN. It is 41.
Uncle, please stop.
Stop what?
You're giving someone else your personal identification number PIN?
Not someone else. It's from my bank.
Please hang up, Uncle. That's a fraudster.
That's not true. But they call out my full name. I am sure this is from my bank.
Uncle, no bank is ever going to call you to ask for your personal identification number PIN, your mobile banking password, or your card verification code, CVC.
But it sounded so genuine.
Yes, hackers and fraudsters always sound genuine. But please, Uncle, don't fall for their bait. Don't respond to any phony emails, text message, SMS, and don't click on any link you're not sure of. Even if they call your date of birth or your BVN, don't give them your security details. If you suspect any issue with your account, please go to your bank.
Oh, I see.
This message is from the Central Bank of Nigeria.
In the news this week, the Central Bank of Nigeria has disclosed that it recovered and refunded more than 15 billion naira to bank customers resulting from failed transactions, illegal deductions, and other complaints. Director of CBN Corporate Communications Department, Dr. Isa Abdul Mumin, made the disclosure on Tuesday, August the 1st, at the CBN fair in Ado-Ekiti, Ekiti State, adding that the Apex Bank has also recovered about $22 million over the past 11 years. Dr. Abdul Mumin, who was represented at the fair by Assistant Director Mr. Imo Esu, noted that the refunds were from over 33,000 complaints by bank customers across the country, and that the Apex Bank remains committed to the protection of consumer rights in the financial space. The recovery initiative is meant to enhance consumer confidence in financial services and promote financial stability and growth. The Central Bank of Nigeria has exempted primary mortgage banks and microfinance institutions from its cash withdrawal limits policy. In a circular sent out Monday, July the 31st, Director of CBN Payment System Management Department, Dr. Musa Jimo, directed the exemption of microfinance and primary mortgage banks that provide banking services to the economically active poor from paying the processing fees for withdrawals above the cash withdrawal limit for direct cash withdrawals from their correspondent banks. This exemption is to enable the concerned banks play their expected roles in the economy and provide specialized retail banking services to their customers. The microfinance and primary mortgage banks are, however, required to fully comply with the cash withdrawal limit in serving their customers with regards to earlier circular dated 21st of December 2022. The CBN has taken its e-Naira sensitization and onboarding campaign to Kaduna Polytechnic, urging the students and management to adopt e-Naira for the payment of tuition fees and for other transactions. Branch Controller CBN Kaduna, Mr. Mohammed Aminu, during his visit to the Kaduna Polytechnic main campus, Tudunwada, noted that e-Naira was designed to complement the existing Naira notes and to provide a more efficient, secure, and accessible means of payment. Management of the Polytechnic, represented by the school bossa, Mr. Mohammed Hamid, commended the CBN for the initiative and assured that the institution supports and will promote the use of the e-Naira platform for transactions. Thank you for staying tuned. You're watching From the CBN, a weekly program that brings to you reports and expert analysis of the actions, policies, events, and economic initiatives of the Central Bank of Nigeria, CBN. In reaching its decision on key monetary policy parameters for the next 2 months, the committee considered the potential adverse effect of persistent rise in inflation on output growth and household income, urging the monetary and fiscal authorities to sustain collaboration in order to address inflation and incentivize domestic investment to reduce unemployment and boost output growth. Earlier, we spoke with the development economist and CEO BIC Consultancy Services, Dr. Boniface Chizie, on some high points of the MPC July meeting Communiqué. Dr. Boniface Chizie, many thanks for joining us on the program today.
Thank you, MPC, for having me.
Now, the Monetary Policy Committee in its July meeting Communiqué mentioned the continued uncertainties in the global economy occasioned by the hostility that is still ongoing between Russia and Ukraine, China's slow recovery, and increasing economic polarization of several economies seeking alliances with a group of BRICS countries. Can you explain to us how this development impacts on our domestic economy now and probably in the near future?
Okay, thank you very much, MPC. I think the first thing is to say that one is alarmed that the world has allowed the Russia-Ukraine war to go on as long as it has done. I think that's not good for us. It's a slippery slope. It's a dangerous thing to be happening to the world. And then if we're not careful, it could go out of hand. Russia is a nuclear power, and so what the nuclear plants are, in fact, within Ukraine territory. So there's a need for us to be very careful. We don't seem to be. People are just aligning. Some are aligning behind Russia, a few, and many, behind, particularly the NATO countries, aligning behind the Ukraine. I feel, from where I stand, that not sufficient efforts is being done, to settle this matter. Now, what's happening in between Russia and Ukraine? Of course, Russia is the aggressor. It's something that is not right, and it has an impact, across all the economies of the world. Now, not long ago, the Black Sea grain deal, the Russians have opted out. They said they wouldn't continue, and that was a deal whereby grains were allowed, to pass through the export, the sea, without being targeted. But now Russia pulls out of it, and lots of grains produced in the world, they come from Ukraine. Now they have to have obvious consequences, for the world economy, because then you have scarcity, particularly amongst African countries and even the Western countries. And so you find that wheat, becomes scarce. And we know what happens, when you have demand and the supply, the supply reduces and the demand is there. And in fact, in the face of reducing supply, there's a tendency, psychology of the market, you want to stock up. And so I think it's a bad thing that's happening. I think that both sides have learned their lessons, and both sides have, we can say that Russia is aggressor, but also the West is not exactly innocent. The West shouldn't have been expanding up to the borders of Russia, the way they've done now. But having said that, enough of blame game sharing. I think that by this time there should be a need for all the world to come to terms, and we will have a concerted effort made, to make sure that this war is brought to an end. Like I said earlier, Russia is a nuclear power, and by the time we go to, if we're not careful, and it's in cascades and goes into the nuclear realm, then all of us will be at risk. So that's one. But I think that the Chinese economy, well, I'm surprised that they have not recovered, because there's no reason why they shouldn't recover. If you take the pandemic, most of us suffered. Well, that pandemic was supposed to have originated from the Chinese. But the Chinese, of course, they're very clever. They're not as transparent and open, to the rest of the world, and so they try to mask these instances. But I don't know why they are having all these problems. But okay, Chinese economy is not exempt. The slowdown is affecting all economies in the world, so that it's impacting them. But why China's case is affecting so many things? Because it's a large economy. It's the next economy to the United States, and so if there's a slowdown in China's economy, then it's bound to the ripple effects worldwide. So for it, there's a slowdown. It affects the demand for petroleum products, and so it affects the markets. So those who sell, like Nigeria, who sell crude, you see that the price for crude is not recently it has appreciated, but you find that it's not appreciated as should have been the case if all parts of the world economy is buoyant and everybody doing business as they should do. So it affects all of us. We hope that collectively we'll have a joint responsibility. The world is a global village to ensure that we are brothers keepers. So we are looking towards the Chinese economy and expecting that they will be on the uptick. BRICS, I think BRICS is a good thing to be happening. We need to somehow begin to reduce the hegemony of the dollar. I think dollar has dominated the world economy, the ecosystem, for a very long time, as the reserve currency of the world. So I think that and Americans have enjoyed it, because they just print their money and they can do whatever they want to do. And so most countries of the world, particularly since the problems between the Americans and the Russians, and then with the Americans back in Ukraine, Russia conflict, and of course, America strongly behind the Ukraine. There's been an attempt, to impose sanctions on Russia, and also there's been an attempt for some other countries to align. Russia is pushing, as a member of the BRICS nation, to increase that alliance. And like you observe in your opening comments, most countries of the world are struggling to join the BRICS countries. So that will not form. They want to form a formidable bloc. And to a large extent, and to the aim is to now begin to have a currency that will compete with the dollar. So these are all. And if you see what's happening now, there's a tendency. The British have just announced that they are going to accept naira for payments. And so that's a good development. And then the online transactions. The Play Store and so on. I think also the announcement by Google that naira will be accepted. Well, I don't know. So those are if you like they've spoken. Those are it's good to hear, but we don't know to what extent how far that is in reality. So we don't know what has happened. But so these are developments which I think that for me, is music to the ear. Thank you.
Now, the MPC also observed that investors' preference is shifting to advanced economies. They are fixed income securities because of improved yields and to safe haven assets. But Nigeria still offers investment opportunities, isn't it?
Yes, Nigeria does. But if you're an investor, you have one of the things you are allowed to exercise your inalienable rights is you look for where you get better returns on your investment, and so that there are no emotions about it. They are not attached to the Nigerian economy, and so if they look at what's happening, they'll come to Nigeria because you see essentially you want to match the risk you face with the returns. And so if you find that risk you face and the returns you are getting, they don't match, you look for that. You take your money elsewhere. So I think that's why we have to be very careful. When we are talking about merging the currencies and so on and so on. And some people, one of the reasons they advance is that it would attract investments. I was one of those people that took my stand and said, this is not an area that it's really works before. I took a stand and I did say that we need to be very careful because we did that before. And each time we tried it, nothing will not try it. I've been around too, for that long. There's nothing we've not tried, and then normally we end up beating a retreat. I hope that will not happen this time around. So now they've said we'll merge it and so on, and it will attract investments, there are lots of money. But the economy has been mismanaged for a long time. And there are lots of backlog of payments, the airlines and so on and so forth. And one of the things, if anybody goes back and looks at the papers positions I've taken in my papers, which are quite active lately, I'm quite clear. I did say that, that's not the way to go. That, for you to begin to, what causes dual interest and so on and so forth is lack of productivity. So you need to find a way to enhance your production. And to the extent that you are not you're not meeting the demands of people. That demand, particularly when it's critical demand. So you're a manufacturer, and so you need to maintain your equipment or some input, critical input. Your manufacturing process is not available in the country. I need to be able to get it. And you go through the official window, importers, exporters window. You are not getting that money. You look for it elsewhere. And to the extent that you look for it elsewhere, then the rate is going to be different. So that's what makes the market different. So it can never be the same. So if you want to harmonize the market, then you need to make sure you meet the supply. Then alternatively, that's what we've just done. You float the currency. And you float this currency, then you face the consequences. Because you have an economy, you are turning throwing the naira into the market. And in Nigeria, you don't have a market. You don't have a market for dollar. You don't have a market for dollar in Nigeria. Because the major source of dollar earnings in this country is oil. And that oil, comes through the central bank. That's the official source. And even that source, quite lately, it's not been something that has been steady. So there are lots of issues with how much we're selling in oil, how much we're exporting. It's all been affected by thefts of oil and so on. I think supplies are coming up now. It's coming up to about, at some point in time, it was very low. It's coming up to about 1.6 million barrels a day. I think last time I checked, our OPEC quota is about 2 million barrels a day. And we're not able to meet it. And there's also issues, and we're still importing. We are selling. We're not selling what we should sell. So I think that there are lots of issues in managing our economy.
All right, moving on. Moving on, sir. Now, according to the National Bureau of Statistics, Nigeria's real GDP grew by 2.31% year-on-year in the first quarter of 2023, driven largely by services and industry sectors. Considering the challenges in the economic environment, you have just mentioned some, is it a wonder that growth was recorded during the period under review?
Well, I think that a person to say that for the growth to be something that's robust and sustainable, it has to be beyond the rate of the population growth rate. Nigerian population growth rate is about 3%, so it's about it will be below 3%. So if you're growing at 2.31, yes, the good thing that is happening because of what's happened in the economy in Nigeria, what's happened in the environment outside the current economy outside Nigeria. So all those things have affected us. But you said 2.3%, and in fact I have my doubts, and say it's in real terms. Does that mean that means above the rate of inflation? And then when you look at the rate of inflation in Nigeria, about 3%, then essentially what it means is that in nominal terms, you're growing for about 6%. Honestly, I don't know where they're getting that from, but that's exactly what it says. But the challenge is on. Also, if you talk of sectors that have contributed to this growth sector, I thought ICT, technology also has been, and then entertainment, like Hollywood and so on and so forth. I thought also that in my books, those two sectors contribute substantially to the growth of Nigerian economy. And it's not something that comes and disappears overnight. So I'm surprised that those ones were not listed. Well, maybe they were subsumed on the services. But when the entertainment is not service anyway, and so we need to be careful. So, but we are trying, but it's still work in progress. So it is not uhuru yet. We cannot begin to say that we are there. So as I explained, we needed to grow a lot more. For Nigeria to make progress, we need to grow about 6-7%. I think that this government, they project that they grow by 6-7%. And of course, I said to myself, that's on paper, because it's going to be a hard road to travel. It's not something that you're going to achieve, just like that. So it's not a low-hanging fruit. It's not a walk in the park.
Finally, the committee noted that the continued uptick in inflationary pressure, with headline inflation at 22.79% in June, driven by moderate increases in both food and core components as a result of security challenges, high cost of transportation, and inadequate infrastructure. What would you recommend to the CBN on taming inflation in the country, considering the factors that are actually responsible for inflationary pressure in the country?
Well, I think sometimes we don't get a handle of what the situation as it is. I think sometimes we put a lot, more than we should do, on the shoulders of central bank. Central bank essentially it just regulates to maintain stability, monetary stability, financial sector. That's essentially what central bank can do. So you're talking of when there's liquidity. So the main concern is liquidity in the economy. So if you look at the liquidity is high, so they increase interest rates, to try and mop up. Of course, I have my take in the sense that when you increase interest rates in Nigeria, does it really mop up? But the challenge we have in Nigeria is that people, you have constraints. It's structural. So people are trying to access dollar, they can't do it, and then so they're trying to get dollar at any rate. And then, of course, you have limited dollar supply, and you have large demands, for this. Dollars, and then dollar is is cascading, it's dropping, so like I was predicted that when you make this is exactly what's going to happen. And when that's happening, that adds on, immediately to your inflation, and that's like cost push inflation. So you have aspect of inflation that's cost push, and you have aspect of inflation that is demand pull. Demand pull is one that central bank can handle. But everything is being left to central bank, and they keep on fighting this war. Of course, they were talked about the fact that there's the policies between the physical and monetary policies. They've tried to complement one another. So that's good to have. Because in the past, we've seen instances where the central bank is trying to constrain, restrictive policy. And then the authorities are, expansionary. So the budget deficits, and so on. So inflation is there, and of course also you have the challenge of food security. The food component in my book contributes quite a substantial part of the inflation, and that is not going to disappear in the near term, because what explains what has impacted the supply chain from the farms is insecurity in the land. So in some of the food belts in the country, the Benue State areas and so on and so forth, and then the northwest and the northeast, they've been affected by insecurity, and so most of the farm hands that would expect to be in the farms, they are all staying in IDP camps, displaced persons camp. So they are all staying there, and so you have this challenge, and that's going to take some time, for that to be rectified. So I think that it has to be all hands on deck for us to fight inflation. The most unfair to expect the central bank to be able to push this through alone. So I don't see why, for instance, we cannot fight this insecurity to a standstill. I think under the previous government, it's obvious to everybody, it's an open secret that there's some sympathy for these insurgents. Well, I would expect that that's not the case now. So if that's not the case, we should be able to support them out and bring peace to the land. We can't continue like this.
I believe the authorities are listening, and we will all heave a sigh of relief very soon. On that note, we want to thank you very much, Dr. Boniface Chizie, for your time and your insights.
Yeah, Missy, thank you for having me for the opportunity. Thank you.
That's all from the CBN this week. Be careful not to fall for any fraudulent recruitment portal or loan scheme advertisement purportedly from the Central Bank of Nigeria. Get your information from trusted sources always. Report unresolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN Contact Center on the phone line +234 700 2255 226. Local call rates may apply. Write to us through the email address from the cbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch uploaded episodes of the program. We invite you to join us again next time. I am Oliye Misi Dada. Stay safe and bye for now.